Started?
Okay. Thank you.
Okay, bye.
Good evening, Darren and Tanya, and all the others that's still going to join us. Tonight, I'm just going to quickly just go through the material that you're going to need for your first assessment. You would have seen on the announcements and also on my module site itself, you would have noticed that the assessment opens on the 14th of March and will then close on the 18th of March. And the material that you need to prepare for that first assessment is learning units 1 to 3. So let me just quickly share my screen and let me just take you to the my modules. I mean, you've all been students previously, so if you were studying last year, this should be very similar to what you've seen last year. When you go to your My Module site, after you've logged in and you have chosen your FAC 1501-24-S1, because first the FAC 1501 is your module, the 24 is for year 24, and the S1 is for semester 1. So when you come to the site, you will see here on the left, that function, if it's not opened, you can just click on it and then it will give you all these detail on the side, on the left-hand side. And here on the right-hand side, if it's not open, you can just click on that little arrow and it will open and give you some additional information. Now, remember, I'm the lecturer, so my screen might show maybe little different things, but mostly yours should be the same. So here you will see your calendar, and here you can see the 14th. It tells you that assessment 1 opens. And here the 18th, it tells you that assessment 1 closes. So always just keep an eye there in case dates might change if the management comes and say, because some or other problems, we need to extend the due dates of the assessments, you need to come here as well and double check. So if I can give you advice, just check on a daily basis, you know, early in the morning or in the evening, whenever you're studying, at least once a day, go there and just double check and see, are everything still the same or are there some new information? The other thing that's very important is your announcements. Here you will see I've got my announcements. So when I click on it, it's taking me to my announcements. And here we've started this year to number them even, so that if a student asks us a question, we can always refer them, please go and read announcement number 5 or go and read number 2. Currently, number 2 is the most important one because it tells you how to unlock all your material. Because for new students who haven't studied FAC 1501 previously, it's a bit different because not all modules lock the material. So for ours, it is locked. And the reason why we're doing it is also to get you through the process of studying it in the sequence that you should, because these are all building blocks. You need to know the beginning to follow up to the next chapter. So chapter 1 is the opening, it gives you the background, and then chapter 2 starts with your assets, your liabilities, and your equity. And then we build on to the expenses, income in Learning Unit 3, and then Learning Unit 4. We're going to continue with our source documents. So you see, every chapter builds on the other one. And that's also how we have set up these learning units. So here's our introduction to FAC 1501, which you should have worked through now. That's where we give the administrative information and we then have the quiz to unlock. And then after you've done that, okay, here's your glossary, just additional information for in your own language. If you are Northern Sotho or Xhosa, you can go here and get some glossaries with terminology there in your own language. But here, basically, the learning starts. Learning Unit 1 with all its different lessons. And you need to start at the beginning. Here's the index. It tells you there's going to be compulsory reading, introduction to financial accounting. So from A to I, you need to go and do every one. So A will be locked. After you've done A, B will unlock. After you've done B, C will unlock. After you've done D, E will unlock. So every time when I then complete I from Learning Unit 1, I will then have access to Learning Unit 2. And then it continues. Some of these, just double check, some of these exercises aren't compulsory, but most of them are. So the ones that are compulsory, you need to complete them. And there are normally a minimum of 50% that you must get for that specific self-assessment. So the reason if you, let's say, tried the self-assessment and you only got 20%, the system will not unlock the next activity. So you need to get 50% before you can then carry on, because that's also so that you understand that specific self-assessment, because that knowledge you're going to need then for the next activity. So that's also the reason why we do that. It's not to punish you, it's there to assist you so that you know when I have done this self-assessment question, I have the knowledge to continue. Because if you can't get 50%, it means that, wait, I need to go back, restudy the material which is applicable for the self-assessment, try again the question, and then when you get 50% or higher, you know now you have the knowledge, and that's when the system will open the next activity. So one for assessment one will have to work through Learning Unit 1, Learning Unit 2, and Learning Unit 3. And then you will get your mandatory assessment 1. And here you can see it says, dear student, you will only be able to access this assessment if you completed all the activities, the reading, the compulsory reading, because remember the compulsory reading is basically your study guide per learning unit. So compulsory reading is very important, and we are going to quickly work through the compulsory reading tonight as well. Now, lessons, it's those A, B, C, well, after A, it's going to be B, C, D, E, F, G, H. Any of those can be lessons. There are a discussion forum at the end. There are quizzes. Those are the self-assessments. And you had to do these for learning units 1 to 3. So on the 14th at 8 o'clock, your assessment will be available if you have completed learning units 1 to 3. So if you haven't done it, your assessment will not be available. So just remember, you need to have worked through the welcome, the introduction to FAC 1501, to do the quiz, where you must get 80%, and then it will open your learning unit 1. So you will then be able to do A, compulsory reading, and then B, C, and continue until you have done the last activity for learning unit 3. And then your assessment 4 will be available to you on the 14th at 8 o'clock. And it will close on the 18th. So don't just leave it till the 18th, because when the system gets very busy, you would have noted last year, then normally we can have problems. And that's when the fun, but it's not really fun, starts, where the system crashes and you can't submit your assessment. So if I can give you advice, make sure that you have covered all the learning units, so that when the 14 it opens, try to do as soon as possible. While all the others are still busy doing their learning units 1 to 3, you should then already be busy doing your assessment. So just remember that. Don't leave it till the 18th. I can promise you well, I don't want problems, but I can assure you there can be problems, because when there are too many students on the system struggles. And then there can be cases where the system falls over and they have to then reboot the server, and you will not be able during that time to submit. So rather do it sooner than later. So that's just giving you the basic background and just to refresh your memory regarding the use of my modules. So like I said, very important, check your announcements, check your due dates. Those are the two important things to do. Now let's move to the learning material.
Sorry, Dion.
Yes.
Just quickly, just on the same note of the system could crash. Please download the compulsory reading sections, because then at least if the system crashes over the weekend while you want to study, you can still work from your study guide.
Yes, listen to that. Thank you, Rika. That's very important, because then you know at least I can prepare myself, and when the system is up and running again, I can just go and do that assessment while the system is up and running. So I think thanks, Rika. Yes, definitely go and download your compulsory reading. It's a PDF document, so you can just download it to your computer and study it if there is a case where the system might crash. Just one advice I can give you. I know some students are using their phones or are using tablets. My feeling or my experience, it's when you work with a computer, it's much easier. The bigger the screen, the better you will actually see what's happening, and it's easier to work with the computer to do these online assessment. So if I can give you advice, if you don't have a computer, I have confirmed with Bronwyn, there is a lab at Cape Town. I mean, now I'm talking on behalf of the Cape Town region UNISA Center, but all other UNISA centers will also have computer labs where you can physically go and work on a computer, because for me, it's always easier. The bigger the screen, the better for me, because then I can see clearly what I must do and what I should do. On a phone, the screen is very small, and some of these activities are not so easy to complete on a phone because of the screen size. So if I can give you advice, always try and make use of a computer. And if you don't have one, please contact the learning center where you stay and find out from them where are their computer lab, where you can go to, find out the hours, which hours are they open, and then go and physically do your assessment on one of the computers in that lab. Because definitely you will see the bigger the screen, the better you can do your assessment, because everything is nice and clear. You see the whole picture. With a phone, you see pieces sometimes, and that is frustrating, I can promise you. So always try and make use of a computer. So now I'm going to stop sharing my modules so that I can then share the learning material. Okay, so what I have here is the document. So I've downloaded basically what Rika said we must do. I've downloaded my compulsory reading for Learning Unit 1. So let's quickly just run through. You have done this already with your previous study. So you should be familiar with this, but remember, Learning Unit 1 is basically the introduction to financial accounting. So it's a lot of theory, things that you can read through. There are some theory that, yes, remember it. I mean, it's like all theory. You read it, you remember it. People ask you questions regarding the content of the theory. So that's basically Learning Unit 1. It's not understanding. It's a lot of theory that you read through, you take note of it, you remember it, and if one asks you a question, it's going to be a question where you just have to give back the theory that you have learned. So it's going to be a question regarding theory. It might be a multiple choice where you ask a question, which one is, let's say, an example of an asset, and then we will give you all the options, and you must then just choose the correct option. So that's basically when it comes to theory questions, it can be in that format. So Learning Unit 1 is theory, read through it, remember it. Let's just quickly look at this specific paragraph, 1.4, the nature of financial accounting. Remember, you always start with a transaction. That's your input. And a transaction is, for example, when you go to the shop to buy a bread, you will go to the shop, you will take the bread from the shelf, you will go to the counter, and you will pay for that bread. Now, there's your transaction. You bought the bread. So, firstly, you have bought the bread. Secondly, there will be a source document. The source document is going to be the slip that you're going to receive from that cash register. So you see, there we have our source document. Then, if I would have then went and recorded it, that slip of mine, I would have recorded it in a subsidiary journal. And my subsidiary journals are used for all my source documents. I must go and record all my source documents in the applicable subsidiary journal. Now, I'm jumping a bit, but we have cash transactions and we have credit transactions. And I must know that for cash transaction, I will have cash receipts journals and cash payments journals and petty cash journal. So those three are my cash journals. Then I know that also I can buy on credit. When I apply to buy on credit from a supplier and he allows me to buy on credit, I will then have the opportunity to buy on credit up to my credit limit, depending on the credit limit I received. But I will then use my purchases journal for my when I purchase inventory. Remember, purchases journals are only used when I buy inventory on credit. But I mean, that's later. This is not now exactly for our Learning Unit 1 to 3. That's going to be in our Learning Unit 6. But just to give you background of the process, I can have credit transactions that will be recorded in my purchases journal when I purchase inventory on credit. When I sell inventory, it's going to go to my sales journal. When I then return items to the supplier, that's going to go to my purchases returns journal. That's when I return items that I've previously purchased on credit. When I return them, it's to my purchases returns journal. The same with the items that I sold on credit. When my debtor, because that's the person that owes me the money, the trade receivable, when he sends back material that it's either broken or it's not what he ordered, when they return it to me, that's going to be recorded in my sales returns journal. So just remember cash transactions, credit transactions, and then we also have the general journal for items that we can't record in either the cash journals or the credit journals. For instance, when I have to record depreciation, depreciation, it's not cash, it's not credit. So that must be recorded in my general journal. So those are basically my different subsidiary journals. Then at the end, because remember, subsidiary journals are done for each and every month of the financial year. A financial year is also 12 months. And then at the end of every month, I must close off each and every journal and post the totals to my general ledger, as well as my debtors and creditors, my sales and purchases journal, and my sales returns and purchases returns must go to either the trade receivables ledger or the trade payables ledger. And then I can prepare, after I have done my ledgers, and especially my general ledger, after I have totaled or balanced the accounts, then I can prepare my trial balance, which is a combination of all my income, all my expense accounts, all my asset accounts, all my equity accounts, and all my income accounts, my liabilities accounts. So remember, it's the full picture at the end, and my trial balance must balance. Then I know that all my entries I've done in my journals are correct. And then my output is basically my financial statement. And if we do analysis, when you do some calculations, but for this module, it's not going to be applicable. And then based on the financial information provided in the financial statements, one will then be able to prepare, give information through to management on which management can make decisions. Well, for this module, we only look at sole traders. So then the owner of the business can make decisions based on the information that he or she receives from the financial statements. I think this is basically our, when we look at Learning Unit 1, I mean, the people that make use of the financial statements, clients, employees, government, these are all theory that you can work through. Remember, in case you get a theory type of question, but this is mostly what is important from Learning Unit 1. So if we move then to Learning Unit 2, that is where it becomes more practical. And remember, accounting is a lot of practical. You need to apply knowledge. And that's where the application of knowledge starts, is with Learning Unit 2. Because here we look at the accounting equation, financial position. Now, my assets equal my equity plus liabilities. So financial position, if you think back previously when you studied, you will find the statement of financial position, and that also consists of assets and equity and liabilities. So we start looking at our accounting equation, which says assets equal equity plus liabilities. So when we look at our assets, equity, and liabilities, we must remember that to be able to identify assets, equity, and liability, I must know what is an asset. I must know what is a liability. I must know what is equity. So it is very important to be able to identify an asset, to identify equity accounts, to identify liabilities. Because if you can't identify them, then you won't be able to complete your accounting equation. Because in your accounting equation, you must show what is my asset, what is my equity, what is my liability. So if I can't identify them, I won't be able to complete my accounting equation. So firstly, we definitely need to know what is an asset. Now, here we give you a short description. Assets are all the resources controlled by the entity, whether they are owned by the entity or not. So what that means is I could have bought it on cash, for cash, or I could have bought it on credit. For example, I could have taken out a loan to buy a vehicle. So I'm going to pay off the loan of over 5 years. So there is a liability, but that vehicle, it's still mine. It's still an asset. So although I currently don't owe it, because only after I've paid off my loan, it becomes by law, or it becomes actually then only my asset. I already bought it. So for the purposes of when we record the transaction, I already record it as an asset. Yes, I will record the asset and I will record the liability, but that vehicle becomes part of my assets. So that's why we say whether they are owned by the entity or not. Although I still have to pay my loan amount over 5 years, that vehicle is already part of my assets. Now, liabilities are the debts of the entity, all the money owed to third parties. For example, long-term loans, mortgage bonds, bank overdrafts, and trade payables. So your creditors. So liabilities are where you owe somebody else. I owe the bank because I have an overdraft. I owe the bank because I have a loan. I owe the creditor, my supplier, because I bought inventory on credit. So it's where you owe somebody. That is a liability. Equity is the amount that the owner invested basically in the business. So when the owner contributes a vehicle or contributes money, contributes an asset to the entity, that is my equity. But also remember, when the business, after a year, after a financial year, you need to prepare your financial statements, where you're going to prepare your statement of profit or loss and other comprehensive income, where we basically will prepare the way you want to calculate, sorry, not prepare, you want to basically calculate your net profit for the financial year. And that is profit equals your income minus your expenses. I mean, that is not something specific now for this learning unit, but just to give you some background, remember profit is income minus expenses. You have your gross profit, which is your turnover minus your cost of sales. And then you will have other income. You will have your administrative expenses that you deduct. And at the end, you sit with your net profit. Now, that net profit is also added to the capital contribution of the owner. And that then forms part of your equity. If you are making a loss, that loss will be deducted from your capital contribution. So that will decrease your equity. So you see, income will increase your equity and expenses or losses will decrease your equity. So just remember that although we talk normally when we say equity, which equity accounts, we will talk about capital and drawings, because drawings is when the owner takes either money from the business for his personal use, or he takes an asset from the business for his personal use. That we call drawings, and when he contributes, that we call capital contributions. So when he withdraw money for his own personal use, you're going to record it as a drawing. And that will affect the equity in total. But then we also have income and expenses, which happens during the year. After the 12 months, we're going to then prepare the statement, and we then going to see, did we make a profit or did we make a loss? If we make a profit, that will then increase our equity, but if we make a loss, that will decrease our equity. So here's just a quick definition. Income is the income earned by the entity through its normal everyday business activities for the financial accounting period. For example, sales, rental income, interest income, and credit losses recovered. So when you work through your learning unit 2, look at all these examples that they give you. I mean, these are things that you can remember. So if you see in a question, sales, oh yeah, sales, it's income. Rental income, oh yeah, it's income. Because luckily, rental income tells you it's income. Interest income, but it can also be rental received. So if we decide we're going to call it rental received and not rental income, you must also know it's income. Interest income, it can be interest received. So you must know it is income. Credit losses recovered is income because you have credit losses, which is an expense, but when you recover it, it becomes an income. So credit losses recovered, it's income, but credit losses is an expense. Just take note of that. If we look at the description or definition here for expenses, we will note it says expenses are the running expenses of the entity for the financial accounting period, normally a year, necessary to earn the income. For example, purchases, rental expenses, telephone expenses, water and electricity, salaries, and wages. So when we give you a question with these accounts in the part of the information, if you see purchases, then you know, okay, this is an expense. Rental expenses, that's an expense. Telephone costs, we can also call it telephone costs. Then you must still know it's an expense. Water and electricity, that's your water and electricity account that you must pay to the municipality. You must know that's an expense. Salaries that you pay, wages that you pay, that's an expense. So what I'm trying to tell you is try and memorize or think of as many examples, examples of assets, examples of liabilities, examples of income, examples of expenses. Because if you know that water and electricity is an expense, you will know what rule to apply. So the first step for accounting is to be able to identify assets, to identify liabilities, to identify equity, to identify income, and to identify expenses. So if you know examples of income, you will be able to identify them. If you know examples of expenses, you will be able to identify them. If you know examples of assets, you will be able to identify them. If you know examples of equity, capital account, my drawings account, if you know them and they are part of a question, you will be able to identify them. If you know examples of assets, you will be able to identify them. If I put in a question vehicles, furniture, equipment, bank, but remember, bank, a positive account, then I know those are examples of assets. And then I know, okay, there's an asset, so I will have to apply the rules of assets. We're going to get to the rules, but first identify. The first step is you must be able to identify these 5 elements. And my 5 elements, just to refresh: assets, equity, liabilities, income, expenses. Those are my 5 elements. And then we have the double entry principle. Every account in my general ledger is done in a T account. So on my left-hand side, I have my debit side. On my right-hand side, I have my credit side. And then there are rules. But that rules we're going to come to. Here it's just to show you, here's my T account. So every account in the general ledger, it can be an asset account, it can be a liability account, it can be an equity account, it can be an income account, it can be an expense account. For every account, there will be a T account for that specific account in the general ledger. And there will be on the left-hand side, my debits, and on the right-hand side, my credits. And this is cast in stone. It can't be debit on the right and credit on the left. No, it's always debit on the left and always credit on the right. Here's just, again, my accounting equation. We set assets equal equity plus liabilities. So what it means is, let's say I have 10 Rand here for assets, and I have here 4 Rand for equity. Then my liabilities must be 6 Rand, because my 4 Rand plus my 6 Rand will give me my 10 Rand for assets. But like any mathematical equation, when you play around with your items, if I move my assets to the left-hand side and I move my equity to the, if I move my assets to the right-hand side and I move my equity to the left-hand side, my equation will change. Then suddenly I will say, where assets were equal to equity plus liabilities, my equity is equal to assets minus liabilities. Because here I said assets is the combination of the two. So if I only want one part of it, it must be then my assets minus the other one. So it's my assets minus my liabilities will give me my equity, because equity plus liabilities are equal to assets. So if I want only my equity, it's going to be my assets minus my liabilities will give me my equity. Now, here we said, okay, if we look at the accounting equation, my debit side assets on my, meaning that my assets have debit balances. My equity have credit balances. And my assets, it's what the entity owns. So my vehicles, my inventory, my furniture, that's what the entity owns. My equity and my liabilities, it's what I owe, because I owe the owner that money that he contributed. It belongs to him. Because if he did not provide me, if he did not provide that money to the entity had to go to either the bank to get a loan or get an overdraft to pay for these assets. So my equity is the money that is owed to the owner. It's almost like he has given a loan to the business. But we don't call it a owner's loan. We call it equity. It only loans when we go and borrow from the bank. When we basically borrow from the owner, that we call our capital contributions. So the money we owe the owner of the entity, it's equity. And when we borrow from, example, the bank, or we get a mortgage loan, that's our liability. So it's money amount owed to third parties. but the two together will be equal to my assets. So my assets have been paid either by money that I have received from the owner, or it was paid by getting a loan. So that's why we can say my equity plus my liabilities will be equal to my assets. Okay, here it's just transactions which you can work through, but I want us just to look at basically the examples of the rules, because accounting has a lot of rules, and that is very important to learn these rules. If you don't know these rules, you're going to struggle. So if you haven't done it previously, please go and do it now, because I can promise you, the moment that you know these rules, accounting will be as easy as climbing a tree. I mean, I promise you, if you know your rules and you apply them correctly, you can do anything. But not knowing these rules, you're going to struggle. So if you have not studied these in your prior studies, please go and do it now. Because if you don't know it, you're going to struggle. If you know it, you will see accounting is not as difficult as people say. It's just you need to practice, practice, and practice. You need to know these rules. And then sometimes there are exceptions on rules, but first learn the rules. And this is where we're going to start learning the rules. What this T account is telling us is that for assets, assets will have debit balances. And then when we debit an asset, it will increase. So any entry on the debit side of an asset T account, any entry on the debit side is meaning that that asset is increasing. So when I buy a new vehicle, I'm going to record it on the debit side of the vehicle account because vehicles are assets. When I purchase a vehicle, I will record that purchase on the debit side of the vehicle account because it is increasing. Assets increase on the debit side. When I'm selling an asset, when I'm selling that vehicle, I will have to credit my vehicle account with that sale that I've done. I mean, it doesn't matter if I sell it for cash or if I sell it on credit. When I sell it, it must go to the credit side of my asset account because assets decrease on the credit side. So assets increase on debit side, decrease on credit side. When I get to liabilities, loans, mortgages, creditors, my trade payables, they have credit balances. And with them, when they increase, I will credit them. When they decrease, I will debit them. So if we receive a loan from the bank, my loan account, because here it will say in your general ledger, the heading of your T account will say loan account, let's say ABC Bank from ABC Bank. And then on my credit side, I will have my credit entry because I have received this loan. So my loans have increased. And when it increased, it is increased on the credit side. But when I start paying back, when I start paying my yearly or monthly payments, when I have to pay every, let's say every month, there's an installment that I must pay for on my loan, my payment will go to the debit side because my liability must decrease. Because I mean, if I borrowed 100,000 and I paid back 20,000, my balance must come down to 80,000. Now my balance is sitting on the credit side of 100,000. So I must have a debit entry of 20,000 on the debit side so that it can decrease. When it comes to my equity, that's like my capital account. Here, the heading will be capital account. I've got my debit side, I've got my credit side. Now, my equity, when the owner contributes, let's say, for example, cash, my entry will come to the credit side because he's now contributing. So his equity is increasing, his capital account is increasing, and equity increases on the credit side. That's why the plus is there to show it increase. The minus is to show it decrease. So when he contributes, it goes to the credit side. When it decreases, it goes to the debit side. So when he is withdrawing money, although we will have a drawings account, just remember that you have a separate capital account, a separate drawings account. Any entries that goes to the drawings account will be going to the debit side. Let's take a loss. At the end of the year, you made a loss, and that loss will be recorded on the debit side. My profit for the year would have increased my equity, so it would have went to the credit side. So learn these rules. I can promise you, if you know them, you will definitely pass this year. Now, when analyzing a transaction, the following 4 questions need to be asked. Which 2 accounts are involved in the transaction? And that's where it comes to be able to identify those elements. Do the accounts form part of assets, equities? So you see, it's still part of my identification of assets, equity, or liabilities. Remember, this is chapter 2. In chapter 3, we're going to look at expenses and income. So when you ask the question, actually, you can add expenses and income here as well. But just for this chapter, we only said assets, equity, and liabilities. But with any transaction, you must actually ask yourself, are they assets, are they equity, are they liabilities, are they income, are they expenses? And if you know those examples of assets and expenses and liabilities and income, you will be able to identify them. So you see the importance of identification of your elements. And then did the assets, equity, or liabilities, you can also say income or expenses, did they increase? Because if it's a liability and it increases, you know, it's credit entry. If it's a liability and it's decreasing, it's a debit. So you see, if you can identify them, you know the rules, and you know, is it increasing? Is it decreasing? If it's increasing, a liability, I must credit it. If it's decreasing, I must debit it for a liability. If it's an asset, if it's increasing, I must debit it. If it's decreasing, I must credit it. And then which one of the accounts must be debited and which one must be, which one must be debited and which one must be credited. So, because remember, double entry, if there's a debit, there must be a credit. I think that's the most important of learning unit 2, because I see the time is running. Just remember here, we have the split between current and non-current. My current, it's the ones that will change within 12 months. Anything like inventory, bank, debtors, trade receivables. Remember, debtors, trade receivables, the same thing. Those are my current assets. So they balances changes within 12 months. My non-current are all my long-term items, my land and buildings, my vehicles, my furniture, my equipment, my machineries, those type of assets that I keep for a longer period. And it's normally those are also the more expensive ones. My short-term or my current assets are my trading inventories, my consumable stores on hand, my trade receivables, my other receivables, my accrued income, my prepaid expenses, my bank. And remember, bank is a devil. It can be favorable, then it's an asset. When it's unfavorable, it becomes a current liability. Just remember this. This is very important because that's basically the only account that can change, either being an asset or being a liability. So when it's a favorable or a positive balance, it's an asset. When it's unfavorable, like an overdraft or a negative balance, then it becomes a current liability. So just remember that. So if you learn these examples and you then get them in a question, you will know that if it's trading inventories, I know it's an asset, it's a current asset. If it's machinery, I know it's an asset, it's a non-current asset. So go and learn these things. Liabilities, the same here. Current liabilities, less than 12 months. Non-current liabilities, more than 12 months. Again, I've got examples. Trade payables, it's current. Other payables, it's current. Bank overdrafts, here you see. Here's my bank overdraft. Here's my bank positive. Here's my bank basically negative or unfavorable. It's another word. We talk about unfavorable bank balance, or here it's a favorable bank balance or a positive balance. My current portion of a long-term borrowing, my short-term borrowings, my accrued expenses, income received in advance. It's all examples. Learn these examples for current liabilities. So when you see bank overdraft, you must know current liability. If you see mortgage, if you see long-term loan, if you see debentures, you must know it's a non-current liability. Learn them. That, I think, it's Learning Unit 2. Let's quickly jump to Learning Unit 3. In Learning Unit 3, we again say accounting equation, but then financial performance. And performance means, am I making a profit? How is the business performing? Is it making profits or is it making losses? And the only way you can calculate a profit or a loss is to take your income and subtract your expenses. If your expenses are less than your profit, you will, if your expenses are less than your income, you make a profit. If your expenses are more than your income, you are making a loss. So that is my performance, where the other one is my financial position. Position is my equity, assets, liabilities. Performance, it's my income and my expenses. So here we just give you again, if an entity makes a profit when the income it has earned from its business activities is more than the expenditure it has incurred in generating or producing that income. An entity makes a loss when the expenditure it has incurred in generating or producing the income is more than the income it has earned. Exactly what I said. Profit or loss for the year is therefore my income minus my expenses. Now, just remember that at the end, when we started at the beginning, I said my equity, it's also influenced by my income and my expenses. Because when I make a profit, it will go to the credit side of my capital account. If I make a loss, it will go to the debit side of my capital account. So losses, and therefore I can also say losses and expenses will decrease my equity or my capital account. Profits and income will increase my equity, therefore increasing my capital account. Now, here we also say then a profit account or an income account will increase on the credit side and will decrease on the debit side. So my sales, if it's a sales account is an income account. When I am selling and my sales increase, I must credit my sales. If my sales are decreasing, I must debit my sales. Again, we give you examples. Either you've got your revenue accounts, or you have your normal income accounts, or your profit accounts. Now, the only example of a profit account is like, for example, the profit on sale of a non-current asset. When you sell a vehicle, when you sell equipment, and you sell it for more than the cost of that asset. When the selling price is more than the cost price, you make a profit. If the selling price is less than the cost price, you make a loss. Now, here for the profit, that is when my sales price is more than my cost price of the assets, so I make a profit. My revenue is where I have either sold an item, or I have basically provided a service, because revenue can either be by providing a service when I'm a service entity, or when I'm a production entity, I make or buy stuff and sell them. It's items that I'm selling. That's where I have sales. When fees, it's a service entity. Like when I am a plumber, I'm going to charge you a fee for my service. When I'm selling computers, I'm going to show it as sales, because there are items involved. Here it's a service, and I charge a fee for my service. Interest income is when I earn interest on my positive or favorable bank account. My rental income is when I charge somebody they are renting from me. So I charge them a monthly rental fee. So that is my rental income. Commission income, and then credit losses recovered. So these are all examples. Learn them, so that you know when you see these things, you know it's income accounts. Then when I look at my expenses and losses will decrease my equity. Expenses will decrease my equity. So losses and expenses on their own. If I have an example like my stationery, if I have a stationery account and it increases, I'm buying stationery, so my stationery is increasing. When my stationery is increasing, I must debit it. If my stationery is decreasing, I must credit it. So learn your rules. Expenses increase on the debit side and decrease on the credit side. Now here I have also again expenses. Okay, here's my definition. And then we have our expenses and our losses. Like I explained, the profit on the sale of the non-current asset, you can also have a loss on sale of non-current assets. So my loss will be when my cost of the asset is more than the sales price of the asset, of the non-current asset, then I will make a loss. Other examples of expenses are my cost of sales, my rental expense, my interest expense. It's when I paid interest. So this can also be called interest paid, rental paid, wages and salaries, advertising, credit losses. So that's my bad debts that I've written off. The debtor that can't pay me, I've written it off. It's a credit loss. It's an expense. Insurance, it's an expense. Repairs and maintenance, telephone expenses, or you can call it telephone costs. Water and electricity, postage, rates and taxes, stationery, consumables, packing material, bank charges, depreciation, administrative expenses. So these are all examples of expenses. Learn them. Go and memorize them, so that you know if you see something like that, oh, insurance, oh, that's an expense. Expenses increase on the debit side, decrease on the credit side. Expenses decrease equity. Learn those things, remember those things. And then these are just examples of entries where we have given you an expense and you must then go and allocate it under the correct column. Either it's an asset or equity or liabilities. But these things you can work through. I think the rules are the most important. Learn the rules, because then you can apply them. If you know the rule, you can go and apply to any transaction that we give you. But if you don't know, or if you're not able to identify the elements and know examples of the elements, then you're going to be stuck. So go and learn examples of assets, examples of income, examples of expenses, so that when you see it in a transaction, you can identify them correctly as an asset or equity or liability, income or expenses. And then you apply the rules. If it's an expense, you must know expenses increase on the debit side, decrease on the credit side. And you must also remember, because sometimes we don't ask you, we might have an income and an expense account, but we will ask you what's the effect on assets, equity, and liabilities. Then you're going to say, but now you've given me only assets, equity, and liabilities, but in the transactions, I only have income and expenses. How now? Then you must remember, but okay, income increases equity. So my equity is going to be affected by the income. It will increase my equity, my income. If there are expenses, expenses will decrease my equity. So remember that although it's income and expenses, and we only ask you the effect on assets, equity, and liabilities, I must remember that income will increase my equity, expenses will decrease my equity. So I think these are basically the important stuff from Learning Unit 3. So that then basically covers the 3 first learning units that you're going to need to be able to submit your assessment 1. Let me then stop sharing, and Darren or Tanya, if there are any questions from your side, anything that you want to ask us?
Thank you so much, Leon, for your time and taking us through the learning areas whereby we need to focus on in order for us to be
Okay.
able to start building the systems. So thank you so much, because it does actually give clarity as well,
Okay.
because at times, for example, like for the past 2 years, I've never went into depth. So what I do, I'll just like focus on that particular
Okay.
area and then go to, like, for example, not follow like learning from 1 to 3. So hence sometimes,
Okay.
especially with the assessment, you will not understand. But thank you so much for that, and I'll definitely
Okay.
implement that as well. Okay.
You're welcome. Now, all the best. All the best with your assessment. Anything from your side, Darren?
I don't know. I'm good. I'm good. I did work through
Okay.
my units from 1 till 3, so I have completed
Okay.
all my stuff on my end. I just need to complete my assessment, but I think I will
Okay.
work through learning unit 3 more, because I think there's more information and more details.
Okay.
So I will.
And
Yes.
you've now seen how the income and expenses also then finally affect your equity.
Yes, yes, definitely. So that's why I'm saying, in learning unit 3 is basically a continuation of learning unit 2, just with more details and more information. So I think
Yeah.
I need to read more and practice more through
Okay.
all the
Yeah.
transactions examples that they give you in learning unit 3.
Yeah. Because just to sum up again, learning unit 2 was my financial position, which consists of my assets equal equity plus liabilities.
Yes,
And then learning unit 3 was my
financial.
performance.
Yes.
my financial performance, where we said financial performance is your income minus expenses.
Mm.
And that will then give you either a profit or a loss. And that profit or loss must then be transferred to your equity account.
Yes.
So that's where it then combines again with Learning Unit 2.
Mm.
Because in Learning Unit 2, you basically have the header of equity. And then in Learning Unit 3, you have the components of your equity, which is
Yes.
made up by my income and my expenses, which will then at the end have a net effect on my equity,
Mm.
which bring us back to assets equal equity plus liabilities.
Yes.
Okay, but all the best. Any other questions, or are you fine?
I'm good. Thanks, Dion.
I'm also good.
Okay,
Yeah.
you're welcome.
Thank you.
Thanks, Tanya, and thanks for attending, and all the best with your first assessment.
Thank you so much.
Thank you.
Okay,
Okay.
so
Take care.
thank you.
Yes, bye.
Thank you. Bye bye. So then we will see each other again with the following
Yeah.
meeting.
Yes, most
Okay.
definitely.
Okay.
Thank you.
Thank
Thanks,
you.
Dion.
Bye.
All the best.
Have a nice evening. Bye.
Thank you. You too.
Remember to stop the recording.
Yeah.